Good morning. This is Tom Alexandria. It is Sunday, June 15th, and this is the weekend report for stock market report for Monday, beginning the week, Monday, June 16th. Happy Father's Day to all of you fathers out there. Okay, we have a little bit of a perturbation in the force here in the market. The little skirmish in the Middle East caused a decline on Friday. Now, what's that turns into remains to be seen. But so far, it's a pretty benign decline, frankly. I'm going to show that in just a minute. But let's take a look at the charts here. This is, to me, this is the most interesting view. And it has been the most interesting view for a number of weeks. Now, those of you that are familiar with market profile, this is clearly a market profile chart configuration. Each profile unit that you see here is 1 quarter of trading. So this is the second quarter. Each slot is 1 week. So instead of a bar chart, each letter is a 1 week, would effectively be a 1 week bar if I were to split this entire chart out. So I'm going to remove the splits. And what market profile is, and I'm not going to do a deep dive into market profile, but market profile was initially posited by Peter Stellmeyer to display the auction market process of development. And an auction market develops following three very consistent steps. And the market also is heavily rotational in all time frames. And it helps us to identify probabilities of the path. At times, it helps us to identify the probabilities of the path that a market may take. Sometimes you don't know, you have to wait and see. And there are other times where the probabilities begin to dramatically increase as to what is most likely to happen. And what I began discussing 5 weeks ago has really come to pass in a quite an elegant way from an auction market perspective. Now, I would strongly encourage you, if you would go to the website, alexandertrading.com, click on weekly update. It's free. And you can go back and you can see weekly updates for the past several years. But in particular, if you go back 4 or 5 weeks, I have been displaying the profile and showing a potential schematic of how I thought the market would develop. And that is exactly what we're seeing now. Now, this is still for this particular time frame, this is an extraordinarily vertical structure. Could we still go higher? We could, but it would not change my view that the market is more likely than not to see what we began seeing last week, which is more volatility and more range, both up and down. The market was so one-sided off of this April low. The retracements were extremely shallow, extremely short-lived. And I think now what you're going to see is probably a deeper probing of this range than we've seen. And Friday could just be the very, very beginning of it. So let's take a look at the individual charts. And so here's the SPX. And from the absolute top tick on Wednesday to the bottom tick on Friday, we're down a whopping 1.58%. Well, you can see that's on the very, very, very low end of retracements that we've seen since the April low. And the rally since the April low has been extraordinarily vertical. So this is not extreme by any measure whatsoever. That doesn't mean this market doesn't turn and scream higher, but the probabilities are that it will not. The probabilities are that it will continue lower sooner rather than later. And we'll probe some of these downside levels that you see here highlighted on the screen. This is, We have an area here, 59.39, 59.21, that's not far below Friday's low. Then you have this level at 58.43 on down. You have this giant gap in here. Would not be a big surprise to see that tested. But again, we'll take this a step at a time. We look at the index, very similar picture, as you would imagine. The index is off about a little more than 2%, but no great shakes. If we look at the Dow, it's off about not quite 2.5%. All of these charts are posted on the website. You can also, if you go to the weekend report on the website, you can also download a PDF if you want to print these out so that you have these levels. And then the Russell, similar situation, down 3.5%. New York Composite, the broadest of the indices, down only 1.34%. And the equal weight S&P down about 1.75%. So far, the declines off of the rally high from last week, pardon me, are quite tame, really, so far. Now, we have Globex opening tonight. That will probably be volatile in one direction or another, or possibly both. I think we're due for more downside probing. That's what the auction is telling us at this time. Let's look at the internals here. Okay, we landed on breadth, and the green arrows here are negative 2,000 breadth readings. I'll pull this over, that are rare in bull trends and are very common in bear trends. So if we are in a multi-month or multi-week bear trend, which we haven't had in a while, we're likely to see more negative 2,000 breadth readings than we've seen recently. You can go back, you can scroll back and see how relatively rare these negative 2,000 breadth readings are, except when you get in bear trend. So that's one of the signs that we're in a bear trend. If we start having clusters of these within a few days of each other, that tells you that something is developing, that there's something more serious developing to the downside than anything that we've seen in a while. So that's what this looks like from a technical perspective. By the way, the red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of NYSE advancing issues. If you are new to my work and this channel, you know that I don't use indicators. I don't use magic numbers. I strictly use price action through the lens of auction market development. So these are the quote unquote indicators I use. It's actual market generated information. There's no magic to it whatsoever. And then VIX, which is reflective of concern and volatility and uncertainty, it spiked dramatically last week. However, it's not extreme by any stretch of the imagination. As you can see here, it can get a whole lot more extreme. And if this is a quote unquote real decline, we're very likely to see 30 plus VIX at some point prior to VIX leveling off. It could be, and again, it could be 30 plus. This was 50 something. So guys, that's it for this weekend. Could be a very interesting opening tonight in Globex. Next week could be interesting. If you have found value in this, please subscribe to the channel. Enjoy the rest of your Father's Day, you fathers out there, and in your weekend. I will speak with you again soon.